Thanks for tuning in to this broadcast of the Resilient Advisor podcast. My name is Jay Coulter, and joining me for this special episode is Lenore Hawkins of Tematica Research. And the reason I say this is a special episode, we're in the middle of a market meltdown. Some feel that it's the result of what's going on with the coronavirus, and Lenore is in Italy with boots on the ground. You're going to find this episode to be very data-driven because we both love math, but also subjective as to what she's seeing on the ground in Italy. Lenore, it's 6 o'clock over there. I appreciate you taking some time out of your Friday night to talk to us.
Oh, no problem. And behind us here, this is you're looking at Lake Como.
Lake Como. So help us geographically challenge folks out. Where is Lake Como in Italy?
Okay, so if you look at if you were to look at a map of Italy, you know how it's the boot. Milan is up at the top of the boot, so it's bordering right there on Switzerland, up at the top. Milan's kind of in the middle up at the top, and then Lake Como is about 40 minutes north driving. It's about 40 minutes north of Milan. And Como, the town where I am, is at the base of Lake Como. And Lake Como is kind of looks like an upside down Y. And the east side, if you upside down the east side of the lake, that's Lecco, and the west side is Lake Como.
So you're in northern Italy.
Yeah, northern Italy. I am in ground zero. So Milan, right? Milan's basically kind of shut down. It's sort of a ghost town at the moment. All my meetings in Milan have been canceled for the foreseeable future. And just north of me is I can get there in maybe 15 minutes driving, is Lugano. And that's the place in Switzerland that had the first case of coronavirus in Switzerland. So I am kind of shuttered. We're not really going anywhere.
What does that look like on a day-to-day basis? What happens if you walk out of your house right now?
It's what you see here if you walk out is because it's not as bad here. Like, this is not, to be clear, this is not one of the quarantine towns, so it's definitely a bit better. But like, all the gyms here are closed, all the churches are closed.
Is that the rules? Is that state mandated, or are they self-closing?
State mandated for the gyms, schools, universities, and churches. That's state mandated. They don't want people congregating. The gyms closed. They were open last Sunday, and on Monday they closed them all. They're going to give us an update this Sunday, whether or not they're going to open them again. So far they're telling everyone don't go into Milan, right? They're trying to keep people to stay at home as much as possible. Like, all the people I work with, their companies, even down like Goldman Sachs, is not having anyone come into Italy. They're saying just stay out of Milan, stay out of these more dangerous regions, and work from home. Okay. And if you walk around here, it's just really quiet. I mean, you need to get to the store and get food, but it's really quiet, not a whole lot of people out. And every now and then you see somebody in a mask.
All right, so you don't see a lot of masks. How are the food stocks right now? Are the grocery stores still full?
I know social media made it look like it's a complete Armageddon here, which was kind of funny. And I'm sure there are maybe a few little spots probably in the towns. There's like, I think 12 towns just south and about an hour south of me that are quarantined. Well, sort of quarantine. I mean, you're not supposed to go in or out. Probably bad there. Here, no. Here, we haven't really had any problems like that yet.
Okay. So some of the conversations here in the States that I'm having with just peer group is what happens if they do close the schools here in the U.S. Yeah. What does it look like? And we'll get into the economics of it and the market impact, but what's it like for the families right now?
Well, mostly it's people just don't know what to do. And like on kind of a more personal basis, which also then applies to the economics, is like, I was supposed to go to Genova, which is a town I lived in when I first moved to Italy. I lived in Genova for a while. I was supposed to go there, had a couple board meetings, and then have friend's birthday party. And it's a big, huge 50th birthday blowout. He's got a lot of friends, going to have a huge, huge party. And it got canceled, right? Because nobody can really get together. And that's money. When you think about the economics of that, that money is not really ever going to get spent. That is coming out of Italy's GDP, and Italy already was in contraction last quarter. So it's going to be definitely in a technical recession after the first quarter of 2020 with everything that's going on. You've got the Milan Fashion Week kind of got shut down early. The Venice Carnival Festival that's every year got shut down early. You've got conferences left and right that are being shut down, and that money is just, it's not going to come back. And I've been seeing people saying, well, it'll be pent up demand. Well, not for a lot of these events. You're not going to get that back.
Mm-hmm. So when you think, before we move on to the economy and the markets and the impact, just socially, I'm curious, if you see somebody in the street that do you give them a hug? Do you shake their hand? Are people just nodding? Are there social graces like that are being pushed to the wayside?
It's kind of, so in Italy, when you greet, everybody, even like two men, two women, men, women, you do a little kiss on the cheeks, and it's still happening, but everybody kind of looks at each other real nervous. It's one of those, we don't really know, you don't want to be offensive, so you don't really know what to do. But on the street, it is funny. People are definitely giving each other like a little bit more room than you would normally see, and it's different. This is a culture that's very warm, very affectionate, and it's this kind of weird strain that you don't really know how to interact.
Yeah. All right. So last question about this stuff. Do you think you have any advice you could give American families looking at what's happened in China, now progressing to Europe, to prepare?
Definitely, like, load up on your food stocks. Be prepared to be staying home, because it's really, it's the best thing that you can do is just to minimize all contact, or not all, but minimize as much contact as you can with large groups of people. So you want to have a lot of food. You want to have something to keep yourself busy and entertained. And thankfully, technology makes work not so tough now from home. But I think what's really going to be challenging here is more on like the big city state level. You and I had been talking earlier about kind of the math behind this. And I think one of the things that's really challenging is that you hear people talking about, well, on the one hand, for any one person, this is not really any more dangerous than your typical flu season, right? I'm not sure that that's true. If somebody wants to understand kind of the numbers of it, you can go to our website, Tematica, Tematica research.com. And you'll see a piece I just wrote that goes through the math of just how lethal this might be. And the numbers really range. And it's kind of easy to understand that, because when you're thinking about mortality rates, well, the mortality rate is how many people catch it. And then out of the people who catch it, how many need to be hospitalized. And then out of that, out of the people who catch it, how many actually pass away. Well, when you have something that is so contagious, the number of people contracting it keeps increasing really fast, right? So your denominator keeps growing fast, and the number of people who die is, how is that in proportion to, because how long does it take for people who are unfortunately going to pass away from it? How long does that take? So the numbers are confusing. And in that piece I was talking about on our website, I kind of walk you through like what the numbers look like from different regions, looking at China, at Wuhan, outside of Wuhan, South Korea, and even in what's going on in Italy, what the fatality numbers are here compared to what a normal flu season looks like. Because even the normal flu season, the contagion level, so what percent of the population gets the flu on a normal season, according to the CDC, from 2010 to 2018 in the US, was between 3 and 11%. But what we're seeing here is a much higher contagion level. And that's really the problem here. And that higher contagion level is because you can have it for so long without having any symptoms, right? Because if you get sick with the flu, you get the symptoms pretty quickly, and then you end up staying home, going to the doctor or what have you, but you're not going about, your normal life. Mm-hmm. With this one, you can have it for quite a while. In fact, a lot of people before you ever get it. So that really changes how many people can catch this thing.
And that number has changed. It started at 14 days, and now there's cases of 27 days?
Yes, and they've had cases where people have had it, gotten over it, got better, were tested negative for it, right? Because their bodies theoretically killed all the virus off. And then they got it again. They were tested positive again for it. So we really don't, it's very difficult to have decent numbers on this because we really don't know what we're dealing with. But one of the ways to think about it is the risk here is really about hospital beds. So when you think about how many hospital beds does a country have, right? It's functional. Well, how many people are going to get sick, like with a cold and need them, and accidents, your normal health problems, right? Those don't change that much from year to year. It's not like the number of people getting cancer in a country spikes massively from one year to the next. These things all stay pretty constant. But when you have something like this that is so contagious, something we've never really seen, anything that's nearly this contagious, then that just means that the number of people who are going to get it is a lot higher. Now, for you and me, if we were to catch it, okay, let's say the number of people who actually need to be hospitalized and all that isn't very high, but so the percentage of people who catch it and then have to go to the hospital is no different from your normal influenza. But the sheer number, because so many people get sick, then so many people need hospital beds. And that's where it gets more challenging.
And then the economic and market implications of that, not just the parties that aren't attended, the drinks that aren't bought, the food that's not purchased can't, later be purchased. There are some real structural challenges that could come. Walk us through your thoughts on what we need to be on the lookout for.
Okay, well, one of the things, so we're talking about like how big of a hit is this going to be to the global economy? And one of the big things on this is going to be just how long this lasts. And is this going to be something that kind of, when it gets warm, like do I need to just, in Italy, do I need to just worry about getting through, say, March? And then when spring comes, do things get better? And we really just don't know the answer to that question right now. If it does go away, then you're not going to have, people can get back to their normal behavior patterns. But the deeper question here is going to be how much damage is done to global supply chains. And they were already really struggling because of all these trade wars, right? So you had global supply chains that had been built up over decades that were coming into question because of the trade war. Now with this, companies are going to be looking at, do we really want to be sourcing out of China? How vulnerable are our products? Because while on the one hand, you can say one of the winners out of this situation are those companies that deliver goods, right? Because rather than me going to the store and buying things, I can just have them delivered. But the problem is the things that I'm buying, are they being sourced out of Asia? And now you've got a deeper problem, right? One of the other things to be looking for out of this is how many investments are not going to occur. For example, got a client in the hospitality industry, needs to borrow a big chunk of money. Everything got approved, we were all set to sign, and this happens. And it's hospitality industry. And so now the question is, what's the cash flow going to look like out of this? Because now we don't know. You don't know how long this is going to go out. And you don't know how long, the longer it goes, the more people may really fundamentally change their behavior. And if that happens, does this business look the same? Because the business model that was decided upon a month ago could be completely different today. So that's part of, as this goes on longer, that's another thing that hits GDP, right? That's an investment that doesn't occur. That's a business that doesn't get built up. And that's not coming back if this goes on much longer.
Earlier this week, your partner, Chris Versace, came on and we talked about some specific, I butchered that, some specific stocks that we could look at. And he had a great lens into some of them, Zoom for the stay-at-home workers, maybe taking a look at some of the delivery companies like you mentioned. What other themes do you think investors could look at now, given this pullback?
Well, one of the things actually to do with a pullback is look at, because everything's kind of getting hit, right? Everything's getting hit all at once. And I was looking at, say, Exxon today. Exxon has a 7% dividend yield at the moment, right? I mean, talk about bargain basement. Now, granted, the share price could get hit further, and it probably will in all of this, because energy, we're seeing, oil prices going down unbelievably low. And so that will hit the share price. But am I really going to be that upset if the share price drops, I'll just buy a bit more and keep my dividend going up. But if I can get 7% owning Exxon's coming back, right? That's a pretty solid investment. Those are things I think that investors can really be looking at. I would also caution, though, we are not out of the woods on this. Oh, you can be looking at cleaning companies, right? Because you were seeing where airlines are thinking, we're going to have to do a better job of cleaning, right? That's talk about the liability there. So there's some interesting companies there that you can look at. I think mostly right now, I would be looking at the safety outside of those dividend plays, looking at more of the safety. We are seeing yields on bonds come crashing down, and that's probably going to get worse, because one of the things that is very concerning is the enormous amount of debt out there, both at the sovereign level and at the corporate level. Now, if you get hits to cash flow, and this is talk about, black swan event of cash flow getting hit, are they going to be able to pay on that? And there's so much debt that's just barely above junk level. And if those guys start not being able to pay and you start getting these downgrades, now you have a big problem, because that becomes kind of a death spiral of companies having their debt downgraded, and that makes other companies not looking so good. And you get more and more being downgraded, and all these massive corporate investors cannot be invested in junk, right? So they got to immediately sell that, and you just spiral down.
So the debt overhang has been a topic for a while. In fact, I feel like us in the industry and the investors have just become immune to it, because there's not much of a historical lens if you've been in the market for, the last 12 years.
Completely.
Yeah, really the last 30 years. But let's talk about the implications of the 10-year we were printing 1.2 at some point today. So we could, let's say these corporations come under duress. They have to refinance their cash flows. Let's say the Fed does come in with some coordinated efforts, and the U.S. 10-year falls even lower. Let's say it goes to zero. Couldn't these corporations refinance at an incredibly low rate, and that have an impact on their balance sheet and their stock price? Am I looking at that wrong?
If they can refinance, that's the question, right? Because that's what we saw in the financial crisis. It will look a little bit different, but it's kind of along the same lines. If everyone panics and doesn't know how big of a deal this is, when they have to roll that debt over, it'd be great if interest rates are lower. But if interest rates are lower, it's because growth has just disappeared. And if growth has just disappeared, and if interest rates keep going lower, when are you going to want to step in, right? If you see interest rates dropping, if the 10-year goes from where it was 1.9, now it's back down at all-time record lows below 1.15 for the 10-year. If it goes to zero, which keep in mind that wouldn't be totally crazy, because most of Europe is already below zero for nominal rates, right? So that's not taking inflation into account. It wouldn't be a big stretch for the United States to do the same thing. Are people really going to want to put their money in bonds if they think the rates are just going to keep going down? And don't forget cash flow and total loss, right? If these companies that we're investing in and these bonds that have been issued on companies that can barely keep their head above water, if they go under, then that money's gone, right? There's a massive loss. And think about how strapped we are too, both from a monetary standpoint and from a fiscal standpoint. Heading into this thing, we have a 5% to GDP fiscal deficit. That is something you don't see outside of a big recession, a major recession, or war. And we're already there when the times were still good. And looking at the Fed's balance sheet, well, their balance sheet is right back where it was at the highest point. It's a little bit above before we started tapering. So they're back to where they were with all of this buying bonds. They've been buying them back up again because of that overnight repo thing. And on the other hand, the interest rates right now, the Fed funds rate is already super, super low, much lower than we've ever been at when we've been heading into a recession. So that just means there's less arrows in that quiver.
That's right. That's right. So there was a big debate on Twitter the last couple of days about what will happen to stock buyback programs. What are your thoughts on the implications to these massive buyback programs should this continue on for another couple of weeks or even into the second quarter?
Well, that is the question.
Right?
I think they are not going to be able to do it, right? These buybacks have been funded because corporations could go out and borrow money at ridiculously low levels. Well, if we go into a recession, or even forget if the United States doesn't, most of these companies they have a lot of impact from the outside. You're facing, Chinese tourists are not going to be doing anything. You've got European tourists. What if everyone just kind of panics and stays home? That's going to really change the economy. How are they going to be able to go out there, borrow more money, and do these buybacks when they're working on trying to have their cash flow from their operations just cover the debt that they already have, right? Because there's no free ride. All those buybacks just meant that they were buying more debt, and now they have more of their cash has to go to paying that debt. I don't think they're going to be able to do that if we hit a real serious slowdown.
That's excellent. Lenore, I really appreciate you coming on a Friday night. Now, you can't see it from your end, but we have seen the sun set behind you as you've done this broadcast. I really appreciate it. That was a really
the sunset on Italy.
Yeah. Listen, you be safe over there. I appreciate you coming on.
Thank you. Thanks a lot. Hand washing. Lots of hand washing.